There are a lot of people talking about TSM right now, and it's really not that surprising. Why? Over the last 5 years, this company's up 247%. That is a very good performance, better than the S&P 500, which is only up about 90% in the last 5 years. Also, 1 year performance up 105%. Very, very good. But it's not just the stock performance, why people are talking about it. This company is one of the most important in the entire world. They provide the blueprint that NVIDIA uses to make their AI GPUs, which is very, very important. I think most of you believe that, at least. So companies like Microsoft, Apple, Google, Meta, all the AI stuff in the world virtually is made through NVIDIA and therefore TSM. So it's important to look at a company in great detail to understand if it's a good investment. So we're going to be doing that in today's video. A lot of people would probably consider TSM one of the most important companies in the entire world, and that's because they provide essential resources for Apple, NVIDIA, AMD, all the phone makers. It's just so important. They literally can't make the AI chips without them. They can't make GPUs without them. They can't make high advanced, the cutting edge iPhones without them. You just can't do these things without TSM, and that's why they have such a large moat. And also, if we look at competition, we'll get into this later when we talk about advantages. One of their main advantages, and why I love them, is because no one else really can do what they do. That's not entirely true. Samsung does, Intel's trying to, but Samsung is very unprofitable in their business, and their company as a whole is kind of failing. Not to mention Intel is as well, and they don't really have a whole lot of history in making the nanometer technology. So they do chip fabrication, if I haven't said before. So like cutting edge the people can make them. Basically, the name of the game at the top end level is just making them as small as possible, as compact as possible, because instead of making them better, if you can just make them, hey, we can fit twice as much into this space, then you're getting something that's twice as good. Technically, I mean, you could just make it bigger, but often bigger isn't always easier. That's shipping and stuff like that. So if you can just cram more into smaller, that's generally the name of the game. So we get more cutting edge, smaller chips. They're just basically packing more transistors into smaller or into the same space. But that is just super important. And like I said, almost no one else can do it. There's a high, actually, if you look down the entire quote unquote food chain to companies below them like ASML, KLAC, Lam Research, there's a lot of, and AMAT, there's a lot of money to be made down the line because a lot of these companies have large moats because the machines are so complicated, no one knows how to work it. But with TSM specifically, if you think NVIDIA is an important company, and all their money. Literally, if TSM blew up tomorrow, NVIDIA would basically lose most of their valuation because there's not enough capacity in the world to get AI chips. So all the Microsofts, all the Apples, all the Googles, all the Metas, they couldn't buy AI either. That's how important TSM. Now, we're going to get into this later. Part of the reason that they aren't quite as valuable, have high PE, is it just costs more to make what they do. The machines they have to buy are expensive, they are costly, it takes time to make them, it takes a lot of time to train staff to open they need huge warehouses. They're opening one in Arizona, they're opening one in Japan, although most of the cutting edge stuff is in mainland Taiwan, but it just takes forever to it's just a long drawn out business. So you're never going to have an 80% profit margin. I mean, theoretically they could if they really milked everything, but that would be short term and they'd probably piss everyone off who buys from them, and they'd probably look elsewhere long term. So TSM is smart enough to not do that, and the CEO says that in earnings calls, if you listen to that at all, which probably most of you do not. But they are a smart business as well. Like I mentioned, they don't do short-term gratification things. They're trying to build wealth long term. And like I said, TSM is one of the most important companies in the world. Without what they do, all those successful companies, the Apples, the Nvidias, and everyone down that. So if they buy NVIDIA chips and you're counting on revenue coming from, Google's AI or Meta's AI or Microsoft's AI, that is also from TSM because it's from NVIDIA. PE is a great indicator for how a company is valued. Specifically with TSM, we're at 32.5, and then for PE, 28.5. So we are right at the S&P 500, at least right now. It's at about 30 PE and 23 forward PE, so you are a bit above, but that shouldn't be too surprising when you have a company with, an important moat this large, And two, you're growing this fast, right? TSM has been outpacing the S&P 500 pretty dramatically. Also, sometimes you have to be careful with PE. Sometimes one-time expenses can make things look worse or better, and you can do that by looking at GAAP earnings and non-GAAP earnings. If they're pretty similar, then you have a pretty good idea of that. Okay, PE is probably fairly accurate. If you have a huge discrepancy in GAAP and non-GAAP, then there might be something you have to look and see, okay, why is that the case? TSM doesn't have that. Like I said, they're basically the exact same. So with earnings per share, one thing that sticks out, and that's not surprising, it does that for most semiconductor stocks, we looked at with AMD as well, is that there were really, really high margins late 2021, early 2022, when things were going really, really well. Although we are now at record profits, right? $1.94 and then $2.20 expected for this last quarter. It's not as where it was, right? Because we were only doing 20 billion in revenue, 20.2 billion in revenue, and then for this profit we're doing 23.5, 26.3. And I was listening to one of the earnings calls, and all the people asking questions were just frothing at the mouth for, are the margins going to be higher? Are the margins going to be higher? In my opinion, unless you can keep margins that high for extended periods of time, it doesn't really matter too much. Yeah, is it nice to have a couple quarters with extra cash flow? And yes, that is nice. But it's not, if it's just temporary, it's not really an indicator going forward. So unless they can increase profit margins dramatically for an extended period of time, it really isn't that important, in my opinion. What's more important is maintaining the margins, or being able to increase them for a long period of time, which it's hard to do. It really is. You have to be more efficient, or you have to be able to just sell for more. And honestly, TSM does a pretty good job of not trying to rip off their customers to keep them loyal. So you don't want to see margins go up too much temporarily just to get like a short-term gain. At least I don't as a long-term investor, but also just increase in revenue. And we can clearly see an increase in revenue throughout the years, right? Quarter 4, 2021, or 15.7. This quarter, now we're sitting at 26.3. Let's visualize that annually. Sometimes it's easier to do so. Yes, clearly 2022 was a crazy increase. Then it went down a bit, but you're still getting a substantial increase from 2021 to 2023. And then, of course, another substantial increase in 2024. And that's just kind of how this business is. It was a short-term downturn cycle. Although it's really interesting because generally semiconductors are cyclical. We can see companies that are down right now. STM is down a bit. Off the top of my head, Micron's down a bit. TSM has seemed to buck that trend purely because companies like NVIDIA have, because that high-end GPU computing, it has so much demand for it. There's so much demand from all those huge companies, the Apples, the Metas, the Googles, the Microsofts of the world, have so much demand for it that there really isn't going to be a downturn unless, like I said, companies start pouring less money into that specifically. But until then, you really probably won't have any crazy downturns except for maybe a short-term year like that. But at the end of the day, if we're holding long term, if there's a couple years, let's say 2 to 4 years where it does very well, then a year or two where it regresses and then continues, as long as we're getting that constant growth, that growth in revenue, and then therefore growth in profit over a long period of time, hopefully outpacing the S&P 500, then we don't really have anything to worry about in a long stretch. So, and actually we can use it to our advantage if we understand it, because we can buy at the lows and then either sell the highs or just hold through it. This is a pretty good visual representation of the profit and revenue for TSM the last quarter. We can see a lot of their revenue is from that high performance computing. So this is probably lots of AI stuff, maybe the top end gaming as well. And then we get 34% from smartphone, which is also significant, but not quite as large of a percentage. And then we have kind of a lot of other things, Internet of Things, automotive, digital, others. Automotive is probably going to continue to grow, at least in general, maybe not necessarily in TSM. Certainly as we get more advanced vehicles, like self-driving and all that, you're just going to get crazier and crazier chips in them. But specifically high performance computing, that is the AMDs, specifically the NVIDIAs as well, though I covered AMD, so it's the front of my head, all the AI GPUs and all that. Remember, there are some other companies that do provide what TSM does, Samsung, and then maybe Intel in the future. However, Intel doesn't have the cutting edge stuff yet, the 5 nanometer, 3 nanometer, and Samsung's not profitable, and we can see, although TSM, it's not a crazy profit margin business, it really is fairly high. There is a lot of cost of sales. There's a lot of specifically, R&D doesn't make a whole lot, but a lot of the machines from ASML specifically just cost a lot of money. So there's a lot of money they have to sink into that, and that's one of the knocks on TSM, is that they don't have crazy high margins. Certainly you'll have nothing like Nvidia's margins near 80%. That's just crazy. However, it's also kind of an advantage for them because the machines cost so much. There's a huge barrier to entry into the space, and there's a very large chance that the small competitors they do have aren't going to make it. And it's not really easy for a new one to show up because you have to spend, like I said, you have to spend probably billions of dollars on equipment alone. That doesn't include people and things like that. So it's just very, very expensive. So that's a disadvantage, but also is an advantage in the barrier for other companies competing with them. But we can see there isn't crazy R&D costs and other stuff like that, operating expensive, but the cost of sales is mainly it. And as long as we can see growth in revenue itself, these margins are fine. There aren't really anything to be super concerned about, in my opinion. Taking a look at the balance sheet, there's a couple of things that stand out to me. The first one being debt. We can see $6.5 billion of debt in 2019. That increased dramatically over the next couple of years in 2021, up to $27 billion, over $27 billion. Now, you may say that's not great. Actually, I think that's a pretty good thing, and I'll tell you why. This is a business, this is an industry specifically that requires an immense amount of capital. You have to spend a lot of money to make money. The machines are expensive, and there's just a lot of costs. And so they had it looks like to me like the company had the foresight as rates were going to increase. They borrowed what they needed for the subsequent years, and we can see they only increased debt by $3 or so billion in the next couple of years. That's good. That's kind of what you want. It seems like, of course, I don't know the exact rates they borrowed the debt on. I don't have that at the moment. I don't know exactly where they borrowed from, although I'm pretty sure it looks like that is what happened. So that's another example, just a small example along with everything else, that this company kind of has a good head on its shoulders and they kind of know what they're doing. Everything else, nothing here concerning. You do see an increase in liabilities, but it's not dramatic at all, only from about 19 or let's say 20 billion to 30 billion. Right, that's not crazy. Total current assets increased dramatically from 27.5 billion to 71 billion total assets. Like, there's nothing here that is concerning. Taking a quick peek at the income statement, we saw income or revenue going back to 2021, but we can see it going back to 2019 here. Obviously, we don't have 2024 as we still have another quarter to go before it's official. 2019 we had 35 billion in revenue, just over 35, now we're at just over 70 billion. So that's a substantial increase, and like we said, we know that we're going to have a much bigger increase in 2024 as well. So this is a company that is growing rapidly. We can see that in the income as well, about 12.5 billion to 30 billion. There's nothing here super concerning, not to me. So this is a company, like I said, that's growing. It's growing fast. It's growing well. One thing with it, though, is you're always going to have some sort of ceiling because of having to spend so much capital to make capital, but it's really not too concerning. And this has been a company that is growing faster than the average company. It's important to look at the historical PE of a stock to know kind of the realm it trades in. It's clear with TSM that it has bucked the trend of where it used to trade for like between 2010, 2016 even. It traded somewhere between, let's say, 7 and 15-ish. So a low PE stock. There wasn't a lot of expectation for it to grow. And it has grown, and it has grown rapidly. We can see since late 2014, early 2015, it was about 11 PE. And now we're sitting at about 30. So that is a dramatic increase. And you may say, okay, that's a little bit scary. And it is. However, this company is now growing like a company that's much quicker. You can see the math here. It was at about 1.5 earnings per share. Now it's at about 6.4. Late 2014, right? You're at 11 PE. You're at 1.55. Now today you are at 6.4. So you've over 4x'd your earnings in a decade. So not only do you get that increase in, well, this company makes 4 times more over the last decade, but also it's valued like a company. that is it's 3 times more valued because this company has grown twice the rate of an average company over the last decade. People notice that. That's why you are watching this video on TSM. You're curious about this company. More people are. People are willing to pay higher premiums. Back then, people were not. And that's why it's often hard to see when a company, it's hard to get in on these companies that grow crazy fast, because often, like I said, you get an increase in your value just from the PE ratio going up, people willing to pay a higher premium for it, but that's just kind of what you get. So are we going to get an insane of an indication in share price? I mean, we can see back in about a decade ago, early 2015 is about 25, now we're at 208. You probably won't get as dramatic of an increase over the next decade or so, even if it grows at these rates, because it's kind of priced like a company that grows at these rates. However, if a company's 4xing in a decade period, or even 3xing, you're doing well. The S&P 500 historically, well, it's up about 200% over the last decade or so, but usually you double every 7 years-ish in the S&P 500. So if you can get a company that's over 4xing earnings in a decade's time, that is very good. So 2 things to note here. Like I said, this is a company growing very fast. That's very, very good. However, you are at a higher PE multiple than you really have ever been, at least since 2020. But even then, it's probably not bad because this company has started to grow like a company that should be valued around this rate. So, but if you ever were to get in a bit of a lull, you could probably expect this company to go. I mean, you saw it in 2022. It was trading around 11 PE, which is kind of insane to look back at now. But this is a company that may not trade near the 30s levels all the time unless it keeps growing like this, but it very well might. It would be super easy if the stock and the business performance perfectly match each other and you could just look at one and know exactly how the other is doing. That's not always how things work. So it is important to look at how the stock price has performed, see how people value a stock as well, because that's kind of how it is. And TSM has done very, very well over the last 5 years, 250%. Obviously, there's many companies that have outperformed that, but you can't really ask much more for a company to do over a 5-year period. The S&P 500 is only up about 90% right now. They pay the same dividend, so that's a wash, almost exactly the same dividend. But a company performing over double the S&P 500 performance over the last 5 years, you really can't expect a company to do much better than that. And TSM is there. Now, a lot of that is over the last year, but they've done well over the last year, and TSM was actually pretty criminally underrated. The PE got as low as 11 in some of these areas, and now we're obviously sitting at 34. And if we zoom out, it's obviously very good as well. If we go to 2015, early 2015, you're at about just under 25, let's say 25. Right, that's still an incredible performance over that time frame. You really can't expect a company to go over, it's almost 10xing, right? The S&P 500 is up about 200% over the last decade or so, not including dividends, but like I said, dividends about the same. A lot of the growth in this company is from PE going up. It always used to be a company valued like kind of around 15, maybe 10 PE, and now it's valued over 30. But it still has grown earnings by over 4x in this time frame. That's very, very good. And you're expecting it to continue to grow kind of at that rate. And if you are, this really isn't that expensive of a price. Yes, 34 isn't cheap, but for how quick the business is going, it is good. So in terms of the share price performance, the advantage is it is a company that is performing in terms of share price. No one's really too worried about it. But I guess the disadvantage is it's not a perfect buying opportunity where people are really still not valuing a stock where it should be. Yeah, 35, it's such an important company, which is why you wouldn't be too scared buying in at this price if you're holding long term. But it's not something screaming by either, like, oh, it's outperforming the S&P 500 and it's still PE cheaper. It's not PE cheaper. S&P 500 is about 30, it's 34. So it's not crazy expensive by any metric, certainly with its performance, but it's not really crazy cheap either. Of course, every company has unique risks and advantages, and I'm going to try to cover them in this video now. Of course, I can't cover every single one. If you have any specifics I didn't address, you can ask them in the comment section. I'd like to talk about them. But TSM has a couple key ones. The first one being China risk, the invasion of Taiwan. It's been floated around out there. I don't want to discredit those who are worried about it. You should factor into your investment. I don't think it's super likely, at least full scale, to happen. When you think about how hard that would be militarily to do, it seems unlikely. Now there could be a blockade or something, but also the chance the United States literally backs Taiwan very strongly because they understand the geopolitical risk of the cutting edge or just not having enough because all our huge companies rely on it. That's why the CHIPS Act was passed and we gave Intel billions of dollars, is to do what TSM does in the United States. And yes, there's plants in Arizona and Japan, but it's just not enough, and they make the cutting edge stuff in Taiwan, which is another disadvantage. Basically, if that happens, your TSM's worthless, at least very, very likely. But I do not think it's going to actually happen because it's going to affect every company too. If you're worried about it happening and you own shares in Nvidia, you should sell them immediately because I'm telling you, if TSM or Taiwan is invaded and TSM is hurt badly by it, Nvidia is also worth almost nothing because they rely on the cutting edge stuff from TSM so dramatically, and maybe you might get some from Samsung, but you're never going to have enough supply to meet the demand. So it's a risk, but it's only temporary. Also, it's a foreign company, clearly, so there's some disadvantages there. Just historically, United States companies will outperform their foreign counterparts and outperform them fairly dramatically. However, there's always exceptions. I believe TSM is an exception. I believe ASML is also an exception. And, they're an ADR as well, so you have some fees associated with maybe your brokerage as well, things like that. So those are some of the disadvantages. Some of the key advantages, they just have such a large moat. Just such a large moat. They do what they do well. They have good leadership, I believe so. You don't 4x your earnings in 10 years unless you're super lucky without great leadership. And some of the stuff we covered with debt and with other things like just not ripping off all your customers, keeping them happy, making your money, not doing, we're going to get a couple points up in margin by just raising prices dramatically. Not that they shouldn't ever, but being nice to their customers, they leave some supply with AMD, so they don't just supply to, if they were to give everything to NVIDIA, which NVIDIA could buy them out, right? And then NVIDIA was the only one, then they'd be like, well, we're the only one that can buy from you, so now we want to pay less. They want to keep rivals, so they aren't just, they're a long-term thinking company, which is a huge advantage, I think. So yeah, incredible, important space, huge moat, great leadership. Those are the advantages I see. Actually projecting a stock's price in the future is not something I do a whole lot on this channel. However, I think it's important to cover and kind of look where TSM will be in the future. I think over the next 5 years, this will probably be a company that outperforms the S&P 500. I think there's a lot of money pouring into AI, and I don't think high quality, high tech chips and semiconductors are going anywhere. I think TSM is primed for the forefront of that. However, I don't think this is going to be a stock that has a crazy high ceiling where it can go up like 500% in 5 years or anything like that. I just don't think that's really possible, just with the way the business is set up and what we've covered in this video. I do expect this company to probably outperform the S&P 500. Other than that, saying, it's going to be up 200% or 300%, I don't like to do that because who knows, the S&P 500, we might in 3 years have a recession and the market's still down or something like that. But I do expect this company to probably outperform the S&P 500, assuming there isn't any major market downturns. I really do like TSM. I think it has a bright future, and I think it's one of the most important companies in the world, and I do actually own this stock as well. So if I'm wrong in that, I lose a little bit of money as well, but I think this will be a stock that does well. I'd be really shocked if it was down in the long term. However, short term, who knows where it can go, and really anything further than 5 years out is really hard to project. But anyways, I appreciate you all for watching, especially making it this far. If you did enjoy it, I'd appreciate if you liked or subscribe. I do daily stock content on this channel, including deep dives into lots of companies coming up in the future. So I appreciate all of you for watching, and I'll catch you next time.